All right, so you've decided to sell your home, but you're unsure about how much you're actually going to net after this home sold. So what I want to go over are the different fees associated with selling your property. So obviously you have your commissions. So you've got the listing agent commissions and then the buyer's agent, right? So both of them are going to have their commissions. Usually it can be between anywhere from 2% on each side up to 3% on each side, sometimes even higher depending on the property. So I would expect around 5 to 6% of the purchase price to end up going out in commissions. Then you have the title and escrow fees. So that is all the paperwork that has to be done, the guaranteeing that the title to your home is free and clear, the escrow officer making sure that everything is done perfectly, that the money's being wired out to the right places, that everything's being paid off that should be paid off, checking for any additional liens. And then from there, you also have your notary fee. This is mainly for if there is a loan associated with the home. Notary fee is typically about $250. It depends. State by state is different. But then you have your property taxes, HOA dues if you live in a homeowners association, and your insurance. So you're going to have what's called prorations for those. So as whenever your contract date ends, right, or your home is officially sold, you have to pay those taxes up to that date. So a lot of times clients will have their property taxes and insurance built into their mortgage, which is an escrow or impound account. What you want to remember is you've been paying monthly to build up that impound account. So let's say you fund your loan this month and taxes aren't due until April. You're going to have about 5 to 6 months of taxes in that escrow account, which then as soon as the loan is paid off, the lender is going to send you a check for that amount, the overage, or sometimes they'll do a net payoff, which means that they're going to, let's say your payoff is $500,000, but you have taxes in there. That's your money that you put in for $5,000. They'll give you a net payoff where they net out the taxes and insurance. So now your payoff amount is only $495, right? So those are some different things that you're going to pay, but you also usually in California, it's typical for the seller to pay for the home warranty up to a certain amount. So it's usually $700 to $900. A lot of times the buyers, they'll get a more expensive warranty. Usually it's $1,100 to $1,500 because they want to include different appliances. Also, the roof. I mean, there's tons of things that they can add into the home warranty, but typically the seller will pay for up to a portion of that. So those are some of the fees that you're going to expect. And then obviously you're going to have taxes that you're going to end up having to pay. And this isn't property taxes. This is the taxes on the gain from the sale. So the way that you figure that out is you look at, I bought this property for X amount on this date, and then I sold it for X amount. And the difference between that is typically what you're going to pay taxes on based on your tax bracket. And your tax bracket is based on your income for that year. So with California, you always want to consider, okay, I have my gain, my capital gains that I have to pay on the sale of the property, but you have if it's your primary residence, you're going to have a $250,000 tax rebate or write-off where you can write off $250,000 of those gains. If you're married, then you're actually going to have up to $500,000. So what I always recommend is go talk to your CPA accountant and let them know you're planning on selling. Give them the purchase price. They're also going to ask for the original price of the home, and then they can figure out what your actual tax burden is going to be. So it's always a good idea to check that just so you know exactly what you're going to be left with, right? And then you also have your payoff demand. So anything you own the property is going to come out of the net proceeds that you get. But the payoff demand doesn't change the capital gains on the property. If you owe $500,000 and you sell for $600,000, your capital gains aren't going to be $100,000. If you bought the property for $100,000 and you sell for $600,000, your capital gains are 500,000. So I hope that makes sense. If you enjoyed this, if this added value, or there's something else you want to know or something I didn't point out, go ahead and hit us up in the comments below. But if you did get value from this, like, subscribe, and we hope that you continue on the journey of everything that it goes into listing your property and getting it sold. All right, so if you enjoyed our content and it was useful, go ahead and smash the like button and subscribe down below. Or if you're looking to buy, sell, or refinance, make sure to reach out to us. You can give us a call, you can send us an email, you can even send me a text message. All of our information is in the description. Look forward to hearing from you.